Welcome to Part 9 of Sonoma County's 12-part Insurance Requirements for Contracts training program. In Part 9, we will discuss automobile liability insurance. The first question is, why do we require automobile liability insurance from the parties with whom we contract? First reason is the law. The law makes us vicariously liable. When some other party is doing work on our behalf, we can be held responsible for what they've done, even if we ourselves, the county, didn't do it. So when we hire a contractor and the contractor is driving a truck as part of a construction project for us, if the truck causes injuries or damage to property, we can be held liable because they are working for us. If we hire a consultant who's driving from place to do inspections for us, if they injure somebody while doing that driving, we can be held responsible. We are vicariously liable. The law, the automobile code actually says that. We can be held liable. We want them to have auto liability insurance. The other thing is, who's got more money? We do. Well, maybe not with some of the really big corporations, but most contractors, we're the deep pockets. And so the injured party really wants to be able to get into us to compensate them for injuries. So we require automobile liability insurance. Now, there are three kinds of auto exposures, and the terminology here is a little weird. And again, the insurance industry has used this terminology for years, and they never asked my opinion. If they had asked my opinion, I would have changed the terminology. But no, they didn't come to me. So the kinds of auto exposures that we have are owned autos, hired autos, and non-owned autos. Owned autos, obvious. Those are automobiles owned by the party with whom we contract. Hired autos are autos that the party with whom we contract has rented from others or possibly borrowed. And I'm going to put some examples on this in just a minute. The tricky one is the term non-owned autos, because it sounds as though if you were driving a hired auto, right? A rented auto, it sounds like you're driving a non-owned auto, right? No, that would be too simple. In insurance parlance, a non-owned auto is an auto that someone else owns that they drive on your behalf. Now I'm going to illustrate all three of these so we can see this. In another training, we talked about the cement truck that went wild in El Cerrito, went careening down the hill and caused terrible damage. I'm going to tell the story of that cement truck in three different ways so that we can illustrate the difference amongst owned, hired, and non-owned. Situation number one. The paving contractor owns the cement truck. Loses control, goes down the hill, does all kinds of property damage, injures all kinds of people. That is an owned auto exposure. Situation number two, the paving contractor doesn't own the truck, but they rent it for the job. In other words, they go to rent-a-truck company and they rent this big old cement truck. So to that paving contractor, this is a hired auto, right? It's an auto that they have rented or it could be borrowed, be the same thing. And it gets out of control and it goes down, it careens down the hill and it causes all kinds of injury or damage. That's hired auto liability or hired auto exposure. Now, this one would be a little bit rare for a, well, no, it wouldn't be rare as a matter of fact. All right, we're going to change the situation one more time. We've got a paving contractor we've hired, but the paving contractor is not doing the work. The paving contractor has hired a subcontractor to do the work. So the subcontractor is driving the subcontractor's, are you following all of this? Subcontractor's cement truck on the job for the paving contractor, on the job for the public agency. Got it? And then they lose control and the truck goes down the hill and causes all kinds of damage. To, not the subcontractor, but to the paving contractor, that is a non-owned auto exposure. We see a lot of non-owned auto exposure in the county. For example, consulting firms. Many consulting firms own no autos, but if they send out their employees to do tasks for them, the employees very likely will be driving their own vehicles. To those consulting firms, those are all non-owned autos. Has any of you driven your own auto on work for the county? Yeah. Okay. In terms of the county, yours is a non-owned auto exposure to the county. So, our templates that require auto insurance basically tell us we want to have insurance for owned autos, hired autos, non-owned autos. Now, I will point out that the templates understanding, especially when it's consulting firms, many of them don't own autos. You don't need a waiver because it says owned autos if you own any. And then if you don't own any, it says, but you agree to get auto insurance on your owned autos if you get, if you buy any. Now, who are we talking about? Not the employees. We're talking about the actual entity with whom we contract. And then what we want is coverage for hired autos and non-owned autos. Now, if you were to look in our web pages under the consulting templates, and this comes out under consulting, you'll notice that we've got four consulting templates. And someone's going to say, why the heck do they need 4 consulting templates? Well, we did that to save you guys time and energy and to limit the number of times we have to issue waivers and you have to apply for a waiver. 2 of the templates are for entities like corporations, partnerships, limited liability companies, one with and one without professional liability. But the other 2 are for sole proprietor consultants. For example, your lowly insurance consultant who is a sole proprietor consultant. Coverage for hired autos and non-owned autos is basically a function of a business or commercial auto policy. But when you hire when you contract with a sole proprietor is not going to have a business or commercial auto policy. They're going to have a personal auto policy, kind of like the personal auto policy that you have on your own car. It will be impossible to get hired and non-owned coverage on a personal auto policy. It doesn't exist. And the other thing is the limits. Now, our base limit, unless there's high auto exposure, is $1 million per accident. But the average personal auto policy, about as high as you can go, is $500,000, and a whole lot of people don't have any more than $300,000, and some have less than that. So for consulting contracts where you're dealing with a sole proprietor consultant who does not have heavy auto exposure, we give you a different template. It's exactly the same as the others except for the auto requirement. And the auto requirement for sole proprietor consultants is $300,000 limit, which is reasonable for what they can get on a personal auto policy, and does not mention hired and non-owned autos. Because every contract that we had with the sole proprietor consultant, we were issuing waivers for the hired and non-owned, and usually for the limits. So this is one of the reasons we do that. Now, I want to caution you that if you have a sole proprietor who's got heavy auto use, such as transporting persons or property within the scope of the work, or going from place to place, like inspections or what have you, that is not low auto use, and that requires the template 3 or 5, which has the business auto requirements with the $1 million limit and the hired and non-owned auto as well. How do you vet automobile evidence of automobile insurance? Well, for business auto, for commercial entities, you'll probably get an insurance certificate. And you can see that off to the right, you've got the limits. And on the left, they say which kinds of autos are covered. Well, there's a box for owned autos, there's a box for hired autos, and there's a box for non-owned autos. A lot of times they'll check all 3. But sometimes they'll check any auto. Any auto encompasses all 3. If they check any auto, that's all you need. That they don't have to check hired, they don't have to check non-owned, they don't have to check owned. It's all in there. So that'll do it for everybody. If you're contracting with a sole proprietor, you are not likely to get an insurance certificate as evidence for the auto. That it's usually not done. So what they will send you is perhaps a copy of their little insurance identification card, which you got to be careful about that because it often doesn't show the limits. It just shows that they have the coverage, but it doesn't show the limits. Or they might send you a copy of the front page of their auto policy, which would indeed show you the limits. Now, we are also aware of the fact that a lot of the consultants you hire have almost no automobile exposure at all. Many of them sit home in their office and work on their computer. Or the extent of their driving is that they'll come to a meeting. In 10 years, I think I've been up to the county 8-10 times. I don't have any real heavy auto exposure. I'm not going from place to place. Jamie hasn't seen fit to send me out inspecting all the different county buildings and offices. I'm not planning on doing that. Okay. For some of the templates, you actually have a department waiver available to you where there's no heavy auto insurance. So do check your template assistant in the help text, open it up and see if you have a department waiver, so you may be able to take care of that by yourself. Any questions about the auto exposure? Yes?
Just wondered what the scheduled autos was.
I was trying to avoid that.
I know,
Okay, well, the question is what's scheduled autos? Okay, there are, all right, I guess we'll talk about it.
You don't
When an insurer on a business auto policy covers any auto, which includes all owned autos, they cover any auto owned by their named insured, whether the named insured has reported it to them or not, whether they're paying premium on it or not. As long as it is owned by that party, they obligate themselves to cover it. And I can tell you some war stories about folks that had multiple autos, businesses, and only told the carrier about one or two, and the carrier was obligated to pay the claims for all of them. So there are some commercial auto carriers that won't give you all owned or any owned auto coverage. They'll only give you scheduled autos, so that the auto has to be listed on the policy. And I'll tell you the truth, that for the most part, if we get scheduled, I've been ignoring any auto. I've been accepting that in lieu of all owned autos, because there are some carriers that just won't do all owned autos. They would not put an auto on the policy in most cases that was not owned by the party. It's just they don't want to be stuck picking up autos that the party owns that has not that have not been reported to them and for which they haven't paid premium on that. So it's a really good question. Oh, there's one other thing that I would like to mention about auto insurance, and this is, it's really important. When you have, it's usually consulting firms that are small corporations, partnerships, or limited liability companies. Those entities usually don't own autos. And what they'll send you is evidence of the insurance of the key or principal players there. In other words, the corporate officers. That's very nice, but it doesn't satisfy, because we're not contracting with the corporate officers or the partners. Remember, the insurance always has to match the name of the party with whom we're contracting. There are some, for firms that don't own autos, some insurers will endorse hired and non-owned auto coverage onto the GL, where there are the general liability policy, when there are not owned autos, and that's perfectly acceptable as long as we have evidence of it. And the way it would show on the certificate is, even though it's under auto liability, the policy number would actually be the general liability policy. But yes, that is done quite often. Excellent. This concludes Part 9 of Sonoma County's insurance training program.